Welcome to By the Books, the podcast helping business owners navigate the complex world of business, tax, and bookkeeping. Now, to the owner and president of Kline, Lindsay Kline.
Thanks for joining, everyone. This is Lindsay Kline with Kline, honest, accurate bookkeeping performed on time, and your host of By the Books. I'm here today with Toby Haynes of Payroll Vault. He has over 20 years experience in payroll and HR consulting, and now is an owner of a Payroll Vault in Argyle, Texas. Thank you so much for joining me today.
Thank you, Lindsay. It's nice to be here. Glad to talk about all this.
Yes, we have an interesting topic today that you and I actually discussed quite in depth the other day.
We did. Yes.
Something that a lot of business owners are wondering about and confused about and have a lot of questions about. And, in my bookkeeping company, obviously, I talk to a lot of business owners and they're coming to me with questions. And then I come to you with questions because there's so much I'm confused about in regards to the employee retention credits.
That's right. Yeah. And they have a reason to be confused because it's a really gray area. It's something that's never been done before.
You're right. Yeah. You're right. And there's a lot of things that have changed. And it seems like as soon as something gets solidified, it changes again. So it's been one thing after the other. And it's hard for business owners who are running a business to keep up with this. So when I started talking to you about this topic, I could tell immediately you had done your research on this. You are so knowledgeable about this.
Yes, I've done my research. I've done the research. I'm not an expert in it, but I have read the FAQs with IRS and looked at different notices and things like that. And so I think I have a grasp in how to help companies claim the ERTC credits.
Which is perfect. And the more that we drilled down on it, I could tell that you knew certainly a lot more than I did about this topic. Yeah, so I thought you would be the perfect guest to dive in deep on this and see if we can help other business owners that might be trying to figure out if they're eligible.
Well, I would be happy to dive in with you. So let's go.
So what is the general guidance in terms of whether a business owner is eligible to get these employee retention credits?
Okay, so there's two things that you need to look at. And first is a reduction in gross receipts. So you look at your quarterly gross receipts in second, third, and fourth quarter of 2020, and you compare that to your gross receipts in the corresponding quarters of 2019.
Okay, so the base year that you're comparing everything to is 2019.
That's right.
Okay, and you take it by quarter 1, 2, 3, and 4,
That's
right?
correct, yes.
Okay, and so you take the quarter 1, 2020, compared it to quarter 1, 2019.
That's correct.
Okay.
No, I'm sorry. Quarter 1 is not a part of the employee retention tax credit as far as the compare. So you're only looking at quarters 2, 3, and 4 for 2020.
Okay, so you have to compare quarter 2 2020 to quarter 2 2019.
That's right.
Okay.
And this is going to get confusing, all these numbers and acronyms.
Okay, so let's say you're comparing the numbers. What are you looking to see in terms of trying to figure out if you're eligible?
So for 2020, you're looking for a 50% or greater reduction.
50.
Yes.
Okay. So you need to see 50% less gross sales, right?
Gross revenues.
Okay,
yes.
Gross revenue. 50% less in quarter 2 of 2020 than you had in quarter 2 2019.
That's correct.
Okay. So let's say they can check that box and they did have that much drop in business. Then what?
So the first quarter that happens in, you are eligible to take your employee retention tax credit for all wages paid in that quarter to all employees.
Okay.
And so we'll come back to that in a minute. But so what you do is for that quarter, you're going to take 50% of gross wages up to $10,000. And that $10,000 in 2020 for each employee is cumulative throughout the year. So you're only going to go to $10,000 per employee for the entire year for each quarter that you qualify.
So you can take up to 10,000 in quarter 2, up to 10,000 in quarter 3. No,
10,000 for the entire
total year. Okay,
for the total year.
Okay, so no more
per employee.
Okay, so no more than 10,000 per employee per year.
That's right. So, long story short, if you qualify, you can take up to $5,000 per employee if they have up to $10,000 worth of wages.
Wow.
So
wow.
yeah, it's It's very substantial.
So how would you go about getting this credit if you did qualify for it?
So
is it something that comes in the mail?
So the first thing, you claim it on your 941.
Okay.
Okay, so on your 941, you're going to go, and if you're doing that today and you're looking back in history, and you'd have to file your 941 amended returns for the second, third, and fourth quarter, or whatever quarter.
So you're going back and amending your 941 payroll return.
If you have not already done that, yes.
Okay. Okay, so you have to amend it to basically recognize these credits.
That's correct.
Okay.
Okay. And so the only thing, there's something about PPP. So PPP, when the CARES Act first came out, PPP, you had the option of PPP or Employee Retention Tax Credit. In December, I think it's the Consolidated Appropriation Act.
Okay.
In December of 2020, they amended that and they said you can take both, but you can't double dip. So whatever your PPP forgiveness is, you back those wages out, and then the remainder of the wages you can take the Employee Retention Tax Credit.
So if you got a PPP loan and you used some of those PPP funds for wages, you have to deduct that PPP portion of the wages from your employee retention credit.
That's correct.
Okay.
In the forgiveness period. So if your loan, let's say you got your loan in April, and your forgiveness was a 24-week forgiveness period, then your period is from April 2nd through 24 weeks. Then you're going to take those PPP forgiveness. You're going to use those wages to take out the PPP forgiveness amount.
Okay.
The remaining wages are open for ERTC if you qualified in those in those quarters for that. And so the PPP forgiveness period is probably going to overlap quarters, that sort of thing.
Okay. Now, I think you also mentioned that you can even go into 2021 to see if your quarter, I think it's 1 and 2, right? You can compare those to 2019 as well. Is that correct?
That's correct. And before we get there, I want to follow up on 2020 just a little more, because the first area of qualification is looking at your gross receipts and doing that comparison. And the second qualification which is separate, this is an or, is if you were affected by a shutdown. So if your business was affected by a government mandated closing, either fully or partially. So if you did, then the period of time that you were impacted would qualify you for the Employee Retention Tax Credit.
Okay, so let me see if I have that correct. So if a business was mandated to shut down and they had a period of time that they were closed because of that, they can apply for the ERC, but only for that period they were closed?
Only the period they were closed fully or partially.
Okay,
so
now,
let me give you an example.
Okay.
I'm thinking of a fitness trainer. Okay, so the fitness trainer was closed down. He was closed down by government mandate, and so while he was closed down, he started doing remote sessions. Okay, so he's still getting revenue. He's still operating, but he's affected by the close down. Okay, that makes him eligible for ERTC.
Now, what if he did not have employees?
If he didn't have, ERTC is completely based on wages paid by employees. Okay. So if you don't have employees, then
you're not if wages. You're a business that didn't have employees, you can't even look at this as being an option for you.
Yeah, you don't qualify because you don't have wages. To calculate the credit for.
So let's say the fitness training company does have employees, but let's say because of the close down, they just told him, sorry, we don't have any work for you, and didn't have wages as a result.
Yeah, and that can happen. But, again, when the CARES Act was enacted, you have the option of Employee Retention Tax Credit or PPP. A lot of companies took PPP, so they probably kept their employees on with PPP. And then as the year went on, and they get to December, the law is amended, and now you can go back and recoup Employee Retention Tax Credits as well, as it relates to how you.
Okay. But
take out
you
your-
would have had to have wages during that period you were closed.
Exactly.
Okay.
The employee retention tax credit is on wages paid.
Okay.
Gross wages paid
Okay.
to each employee.
Okay. All right. So basically, the two ways you can get 2020 is if you either had a close down, partially or fully, because of government mandates, which I assume does not apply if you voluntarily close down. Is that correct?
That is, I'm gonna be conservative. I'm gonna say yes. Okay.
Okay.
And
okay.
so
there's potential there's
potential that
okay.
you could, and that's something you may want to take up with your CPA or some other.
Okay. Gotcha. And then the other way being that you had a 50% drop in gross receipts.
Exactly.
Okay.
Yes.
So those are the two ways that you could potentially get the ERC in 2020.
In 2020.
Okay.
Yes.
Okay. Or for 2020, we should say, since 2020 is past.
Yes, that's correct.
Okay. And is there a deadline for people to apply for that credit for 2020?
There is a 3-year statute of limitations. Now, not being a tax professional, I don't know if that means it's 3 years that they can come back and audit you for that, or if it's 3 years that you can go back and get the credit for it. I don't know the answer to that question.
Now,
So-
I've heard some people say, and maybe it's related to something different, but I've had people tell me about the ERC and say the deadline is the end of this year, December 2021. Have you heard anything
I
about
haven't heard
a
anything
deadline?
about that.
Okay.
I don't know anything about deadline.
Okay. Okay.
I'm certainly going to go
Okay.
research that.
Okay. Okay. So what about 2021? If somebody wants to look and see if they're eligible for this year.
And just to go back to that, one of my concerns is finding companies that are eligible for the credit in 2020 and helping them get that. And so I'm focused on this year doing that. After this year, I don't even know how I'm going to be approaching it. So.
Okay. Okay. All right. So for this year, you had mentioned to me that I believe the first 2 quarters, you can still look to see if you had a 50% drop, correct?
That's right. So in December, they extended the employee retention tax credit through June of 2021. Okay. And so I believe that in the first quarter of 2021, you have to requalify. Okay. So if you qualify so if we go back to 2020 and you qualify in Q2, then you get to take the tax credits for Q2 and for Q3. And the reason that you do is because you get the credit through the quarter that you don't qualify anymore. So worst case, you're going to be Q2. You don't qualify in Q3, you get Q2 and Q3.
So you get at least 2 quarters.
In 2020.
In 2020, okay.
Okay.
But that doesn't apply in 2021?
I'm not 100% certain whether it does or not. There's still a question out there. IRS has not weighed in and given clarification on that. There was a notice that they put out at the 1st of August, and I've looked through that, and there's some things that they did clear up, but I don't know if that was cleared up in there.
Okay.
But so now moving on to 2021, you have to requalify in Q1, I believe. And the qualification is comparing Q1 of 2021 to Q1 of 2019. Okay. And you're looking for a 20% reduction.
Oh, interesting. Okay. So it doesn't have to be 50 for 21.
No,
it has to be 20.
20% or more.
Okay.
Okay. And then you can claim up to $10,000 of employee gross wages, 70% of that.
70% up to 10,000
for the quarter, and then you can claim the same thing for Q2.
Okay.
Okay, which is quite significant.
Wow.
Yeah.
Okay.
Yeah.
Now, what if they had already gotten the credit for the same employee back in 2020? Can they do it again in 21?
Oh yeah, this is cumulative.
So it's completely separate.
What they got in 2020 had to do with wages in 2020. What you're getting in 2021 has to do with wages in 2021.
Okay.
Okay.
So you could potentially, essentially, it sounds like triple your credit on that employee because you can get 2020 and then quarter 1 and quarter 2 of 2021. Correct?
Yeah, I don't know if triple is. I mean, because you're looking at 50% for $10,000 for the year versus 70% on $10,000 for the quarter.
Okay, so it's significantly higher for 21.
It is, yes.
Okay,
and so also in 2021, if you're able to show that again that you're impacted by government mandated shutdowns or fully or partially, then you again qualify for Q1 and Q2 of 2021.
Okay, so that pulls forward.
Now, most states were coming out of shutdowns, and so I don't know if I can't say that I've seen a lot of qualifications in that.
Okay, all right, that's good to know. So it seems like a lot of business owners haven't heard of this or don't think they qualify or just don't understand it. So I don't know if those are conversations that you've had, but I know with some business owners I've talked to, it's just the whole thing is confusing and they don't really understand it, so they haven't pursued it. Have you found that to be the case?
Yeah, absolutely. In fact, for a long time, and I think it's because, accountants, bookkeepers, CPAs, they were all busy with the tax extensions. And so they really didn't, with the amended laws in December, they didn't really have the time to focus on communicating this. They were worried about getting tax returns out and, all those things that were happening.
One concern that I've heard voiced from business owners is I don't want to get the IRS's attention. I don't want to cause them to come audit me. Have you heard that concern? And do you think it's valid in any way if they were to try to pursue this credit?
Well, two things. First, yes, I hear that from every single person I talk to, especially when I first started talking about it. And number two is that you're going to claim the credit on a 941, an amended 941 or the current 941. And we don't know, of all the people I've talked to, we don't know of any person that has ever had an IRS triggered audit based on a 941 amended return.
Oh, interesting.
Ever. Doesn't mean it won't
really?
happen, but and IRS is really busy too. They're way backed up on this, so who knows? I don't think so. But the second thing is if you follow the letter of the law, you read the FAQs from IRS, and you do it in good faith, then we think the worst thing that can happen is that they would put a clarification out and say this has changed, and then you just simply go back and amend your return
again.
And maybe do whatever you need to do to reconcile that. And we don't foresee any penalties or anything.
Okay.
I don't speak for the IRS, but that's the way we feel about it.
Okay. So you've helped a lot of people with this, haven't you?
I've helped a few people, yes. I'm a startup company. I have 20 years in payroll, but I just joined the Payroll Vault in community. And so I'm a startup company as well. And actually, all of my new clients, or except for one, are employee retention tax credit.
Nice.
And that's the reason they came on.
Okay.
Two of them are, three of them are startup companies. Which we haven't talked about yet.
Yeah, I was going to say, can startup companies do this?
But oh yeah. So again,
because this is interesting. Because if you were a startup, you wouldn't have had wages in 2019 to compare.
That's right.
How can a startup company get this?
So you're familiar with ARPA, the ARPA, the American Rescue Plan Act.
Oh.
That
I am now.
that Congress enacted in March. So that act actually, it made something called a startup company, which is any company that started up after February 15th of 2020. They automatically qualify for employee retention tax credit for Q3 and Q4.
Wow.
Regardless. Okay?
Interesting.
Yeah. Now, there's a lot of, if you read the law, there's a lot of confusing things in there, but there's in the IRS has noticed that they put out the 2021-49 on August 4th. It says in there, it states in there, and it clarifies it. It says that startup companies that.
Now, what if they started in 2021?
Same thing.
Same
after,
thing.
if that's after
Okay.
February 15th of
Okay.
2020.
And I
Yes.
assume that they would have to currently have wages, right? Have employees.
Well, currently have wages. If you're a startup, like if you start up in May of this year and you have employees, then, and you start paying those employees in Q3 and Q4, then that is, you can claim credits on that.
Okay.
Yes, absolutely.
Okay. That's good to know. I think a lot of startup companies don't know that.
They don't. And I've talked to many startup companies, and it's amazing because when did you start operations? Oh, we started well, have you taken advantage of the employee retention tax credits? No, I did PPP. Well, you can also, we need to talk, and they're like, really? And so virtually every startup company that I've talked to
does not know.
And why should they? They're not out on the IRS side reading and stuff. Yeah, so that's kind of our mission as well, is to take that out. So
nice.
I look for startup companies, and I try to show them how they can
that's awesome.
benefit from this. I mean, it's all for making companies, keeping employees on payroll, benefiting the economy, that sort of thing.
All right. So if there's any listeners or viewers that have additional questions or would like someone to help them see if they're eligible, and you actually will file these for people, correct?
That's right. So if you're a Payroll Vault client, so if you wanted to come on and become a Payroll Vault payroll client, then we can take you on, and we can actually go back and amend prior returns. And then on your future returns, if you're a startup, we can actually claim those credits for you
on the first return.
That's right. And if you do an amended return, just a note, if you do an amended return, it takes much longer to get the credit back. And you check this little checkbox that says "send me a check," and it takes quite a while to get that.
Okay.
But if you're doing it on your 941 return, and it's not amended, then we're seeing significant decrease.
Okay.
I'm not going to give a time or anything, but around 6 weeks.
Okay. Okay. So let's say someone is happy with their payroll company, but they need some help with the ERC. Will you help them too, or do they have to be a customer?
Yeah, we will. No, they don't have to be a customer. We charge a fee because we have to get payroll registers, and we have to load those in a spreadsheet, and then we have to run the calculations to on what the credit is, and then we will probably go back, and we can either give them the numbers for their current provider to adjust the 941. And I don't know if your current provider will let you do that, or if they have to file it and then you have to do an amended return. I really don't know, because right now all of my ERTCs are with Payroll Vault.
Okay.
Payroll clients.
All right.
So
okay, well that's good to know. So how can people find you if they'd like to ask you more questions and possibly use your service for this?
Well, my website is www.payrollvault.com/181. So I'm Payroll Vault number 181. I'm in Argyle, Texas.
Okay.
Or you can search for on Google Payroll Vault Argyle, Texas, and you should find me. And
do you have an email that people can email you?
Yes, it's Toby Haynes, TOBY.HAYNES @payrollvault.com. And I can give you my phone number as well.
Sure. If you want to put it out there, put it out there.
It is 214-726-2886.
All right. Well, and thank you so much for joining me today and going over this. I think this is going to be really helpful for a lot of business owners. It
was fun. Let's figure out something.
Okay.
I want to do this again.
And I'm Lindsay Kline with Kline, honest, accurate bookkeeping performed on time. Thank you, everyone, for joining us today. Until next time, have a great week.
By the Books is presented by Kline, honest, accurate bookkeeping performed on time. For more information on Kline services, or to get a hold of Lindsay, visit Kline.com or email info@Kline.com.
The information provided on this website and podcast does not and is not intended to constitute legal advice. Instead, all information, content, and materials available are for general information purposes only. Information provided by Kline may not constitute the most up-to-date legal or other information. Listeners should contact their attorney to obtain advice with respect to any particular legal matter and should refrain from acting on the basis of this information without first seeking legal advice from counsel in the relevant jurisdiction. Only your individual attorney can provide assurances that the information contained herein and your interpretation of it is applicable or appropriate to your particular situation.